Hello, hello. Hey guys, it's a fantastic day to be alive. I had a great weekend. I hope you guys had a great weekend. My name is Wade Cordell. Some of you may not even know who I am. I am really over the entire Bank Breezy funding platform. We got an amazing team that works with me side by side to help your business and help all of your clients to become successfully funded. I have been with DAC, and by the way, I'm also a DAC broker. I've got a really huge team. We have fundings every month, and it's exciting to see that. I am trying to work my way out of a job, so to speak, so that I can do more recruiting and go through more meetings with chambers. But I've been with David now for about 9 years. We have really work together to make this one of the top, it is the top funding platform in America. And DAC actually was created really to help business owners who are in my opinion, rock stars we talk about all the time, reach their full potential in regards to capital growth, getting the capital growth they need in a timely basis. And it's hard to believe, but 9 out of 10 small businesses that walk into a community bank cannot walk out with $10,000. Not because they have bad credit or they're not good people. It's just the restrictions that have been placed on these banks. And we work. Some of you, the funny story today is an example, but a lot of you work with community banks. You go to the chamber meetings. You do what you're supposed to do to build your business. And when you go to those meetings and meet those bankers that at the community bank, your bank locally, you find out that you guys are not competitors. You're literally working hand in hand to help each other. I had a client that I think I could have gotten funded, but he deserved to go to the local bank, and he was able to. He'd been in business for 10 years, had an 800 credit, and he could have. Well, and he walked out. He didn't need 25,000, and walked out from the bank with that. So I'm going to be, I guess, your quarterback today, but we've got a section on Tuesdays called Thrills and Chills, the thrill of helping small business owner and getting funding, but some of the chills that can kind of come our way if we have not vetted the business correctly. But before we start, I'm going to do our funny story today. This is a consulting company out of Florida. The broker is Cheryl PQ, one of my favorite people in the entire company. I love this lady. She worked with community banks and she worked with chambers. She worked with all the right places, and she is really doing a great job at what we have taught her to do. Now the client needed 75,000. What they were going to do, they were going to expand their advertising efforts in the markets outside of their current territory. However, the problem we had was, and the challenge, I guess I should say, was that the bank statements were extremely complex. They had, first of all, it featured multiple accounts, and they were transferring accounts from here to there between all three of them. By the time you subtract out what transfers go from one account to the other, doing 75,000 wasn't realistic. They were only doing in the low to mid 20s on the money, and we were able to get them that $25,000 in a flex rate over a 10-month period. We were able to do this because of the fact that we took our time to work with the client and find out what do they really need. Do you really need 75,000 to accomplish what you're going to accomplish? And they don't. They didn't need that much. So we got them what we call stage funding, where we gave them 25,000, and once we were able to get everybody on the same page, they got excited about it. We showed them how they could use the money, and Cheryl did her job completely. So great job, Cheryl, on that file that was quite complex, to be honest with you. Today, in our thrills and chills, I want to go over interest rates versus factor rates. We're going to be going over different topics every week. I'm going to do this very quickly. I guess I need to hold on one second. I need to share my screen. All right, here we go. And if you guys would be so kind to let me know that you can see this.
We can,
Yes,
yep.
we can.
All right, so I'm going to talk to you about factor rates and interest rates, and really, it's important that you know it, but you're not going to be explaining any of this to clients. And here's what I say is a clear, client-friendly way that we can explain factor rates versus interest rate. First of all, a factor rate's not the same as an interest rate. It's a fixed cost of capital that doesn't compound over time. For example, if you borrow 100,000 at a 1.34 factor rate, your total payback is going to be 134,000. That 34,000 addition is the flat cost of the money, regardless of how long it takes you to pay it back. Okay. Let me just do this right here. In regards to interest rate, interest rates accrue and they compound over time, meaning that the longer that you take to repay it, the more you're going to owe. And with a really a factor rate, the payment's fixed on day one. You borrow this, you're going to pay this back. And an easy comparison analogy is, think of it like this: a bank loan, let's say, is 10% annual interest rate. It grows larger if you don't pay it back quickly because of the compounding effect of interest. A factor rate is like a flat fee. You borrow $1, you're going to pay back $1.34. There's no surprises. There's no interest on top of interest that's being affecting everything. And you need to understand, guys, there's 27 states out there that have financial disclosure statements that convert our factor rate into what they call effective APR. And it's misleading, but it's the way that they do it. A factor rate is not the same as APR, but you can estimate the equivalent annualization of the or annualized interest rate. And here's an example. Let's take a 142 factor rate over 10 months. The total cost is, back to the borrow, is 42%. But with weekly payments reducing principal and the cost of funds and compounding weekly, they're actually going to come out and show an effective APR of 75 to 90%. And you say, whoa, that and do your math, that's not true. But it's the way you legally have to talk to these clients in those 27 states about APR, because we have to talk about it 100% of the time. You borrow $10, 10,000, and you pay back 14,200. But interest wise on that, it would be 75 to 90% APR in the eyes of what the requirements are for us. So these financial disclosure states take everything really serious. What the revenue-based financial state disclosure laws require are, we got to let them know the total months amount that they're funded, the total payback amount, the estimated APR or annualized cost or factor rate. And by the way, we can't even say the word factor rate or interest when we're doing this, so it's very complex on how we present these offers. We got to go over the payment frequency. Is it daily? Is it weekly? Estimated term length. We got to go over fees or broker compensation in a lot of states, whether there's a prepayment benefit or penalty we have to talk about. And then the total cost of the financing is complicated when we're out there. Well, why do these laws matter in revenue-based funding for the lenders? Well, number one, it provides compliant disclosures. The lenders have to do that. Number two, the lenders have to calculate on the way that the rules are written of compounding interest weekly, even though it's not technically like that. You got to use formatting and language exactly how the state says you have to use it. You can't walk in there in California and start talking about factor rates or interest. If you're doing that right now, you need to stop it. You got to keep your records of disclosures if you're a funder, and you got to avoid deceptive marketing. And if they fail to do that, they're going to be fined. There's going to be lawsuits. There's going to be state investigations, and they're going to lose their ability to fund in that state. Brokers do not present our offers. And here's why. Brokers need to understand There are a lot of states out there that require financial disclosures. Whether the lender handles the disclosure or the broker, brokers still don't present offers. There are advertising restrictions of you in certain states saying interest or whatever. So DAC's done all the work for you. You got a back office, guys. In that back office tells you what you can and can't do. Now, there are license requirements that are coming up in different states like Texas and California, but we're taking care of all that. We're going to keep you up to date when you need to know something that changes. David and I both agree. We're glad all these financial disclosures are out there. We want to get some of these people out of the industry that are out there just not telling the truth. Now, some states are becoming stricter on like double brokering. That's when you got a broker that you're going to pay money to, and you're the broker. That's called double brokering, and you in those states you're supposed to talk about that. Some states misrepresenting terms like guaranteed approval. None of our approvals are guaranteed. They're pre-approved. They're pre-approval offers, which means there's still some underwriting that can be done. But if everything you told us is true and there's no other issues, then they can expect to receive that offer. And then we can't fail to disclose commissions or fees. Bank Breezy makes it simple and compliant. The DAC broker has provided a Bank Breezy application link. We take over from there. It's not that we don't think that you have the ability to present an offer. It's just that why would you do that? If we have an offer, there's an 80% chance we're going to be able to get it funded if we talk to them. If you get involved, that drops to 40%, and we're not going to let you get involved in all those states that have financial disclosures because we're protecting you, we're protecting the opportunity with DAC, and we're protecting the lending platform. The great thing about this is David's got it so simple, so easy to follow. You take this link, you find a person, a business, which is that needs funding, and 6 out of 10 are going to need it within the next 180 days. You get the information out there. All you're doing is providing information that, hey, there is capital out there and you deserve it, and we're going to show you how to get it. So I just want everyone to quit talking about interest rates, quit talking about factor rates. You go out there and find a client when they talk about interest or whatever they're going to talk about. You just tell them that basically as soon as we have them an offer, you're going to have an expert that's going to be able to talk to them about exactly what the cost of their funds are going to be. I would only ever talk about cost of funds. I don't want to scare you, and that's not what this is about. It's just to let you know that there's a reason that many of you call on a daily basis, and you're a little upset because you think that we're slighting you by not letting you be involved in the process. The only involvement you really need is initially getting us the information, and then if we cannot contact your client and talk to them, then we're gonna get you in the middle to get us together. And then if you want to stay on the phone and listen, that's fine. But we don't really want your comments or and to talk during the process, only because we know exactly how to present this to your client in a compliant way that everybody's happy, your client totally understands, and the ultimate goal, number one, is for the client to receive the funding. Number two, you receive a commission and you're happy. And then number three is to make sure we've done this whole this entire process, which by the way takes hours, not days, without any kind of hiccup. I know some of you have found that clients get upset and they do this math in their head and they say, oh my God, the interest rate, this, that, and the other, and you don't know how to reply to it. Well, you basically, all you need to tell that client is that you're going to be an expert on the phone with them that knows exactly how to go over this with them. And most of the time you're not involved in the process at all unless we need your help. So if anybody has any questions, I hope this really helped more confused anybody. The reason I started off with factor rates is that's the number one thing that brokers send us emails about, that they really don't understand it. And that's okay. You don't have to. All you got to understand is you borrow a dollar, you're going to pay back $1.34.